Welcome to the market view for the week of February 21st to 2022. My name is Vishal and I'm going to be analyzing or looking at several charts this week. We are going to have a look at Nifty, Bank Nifty, USD INR. We're also going to cover the IT sector, that is the Nifty IT Index, and we are going to discuss one stock around that index as such. So let's start off with the Nifty analysis. Let's start with the monthly chart. On the monthly chart, we are seeing a level of demand around 15,962 to 15,450. And as you can see that these demand zones are automatically populated on my chart. We have a tool in Trade Tiger, which is the trade zone identifier. And this tool helps us to automatically populate zones on our chart. So 15,962 to 15,450 is the level to watch out for on the monthly chart. If we go on to the weekly chart, we see a similar level on the weekly chart as well. So let's quickly look at the weekly chart. On the weekly chart, the level on the monthly is more or less coinciding with this level over here. And although we have a test of this level, we are seeing the prices bouncing very, very strongly. So the assumption is that if the prices do revisit this level again, maybe slightly on a smaller time frame, we would expect to see another bounce coming out of this level. So let's move on to the daily chart to just see where that level is located. And on the daily chart, the level that I'm pointing out, which is more or less coinciding with the weekly chart, is this 16,355 to 16,132 odd level. And we can see very closely that the prices came close to this level of demand, gave a very, very strong bounce. And possibly it indicates that there are still a lot of pending orders here. And if price does revisit this level, we would expect to get a slightly bigger bounce as well. So the closest level of demand to watch out for is 16,355 to 16,132. If we go to the Bank Nifty, and let's analyze the Bank Nifty from the monthly perspective. So let's go to the higher time frames first. On the monthly chart of Bank Nifty, the closest level of demand from current market price is 35,477 to 34,018. And right now the markets tend to be in a little bit of a consolidation on the monthly chart on the Bank Nifty. But we do need to keep a close watch on this level of demand before prices might tend to head down further. So if this level of demand is held, then we might slightly begin to rise up once again, or might tend to consolidate for a little longer period of time. So this is a level to watch out for in the coming months or in the coming week. Let's have a look at daily chart of the Bank Nifty. On the daily chart of Bank Nifty, again, more or less, if we look at the big picture, Bank Nifty is consolidating between 40,750 to 41,367. And the level of demand is 35,378 to 34,751. Now, because the prices are far away from the demand and far away from the supply, as an options trader, you can take advantage of the demand and supply strategy and look to plan non-directional trades using options. Okay, so this is a strategy that we generally tend to deploy in our education courses or in our education classes, where the prices are far away from demand and supply. It's also a good idea to get into the non-directional mode and try to get something out of the market. Let's look at the USD INR. The USD INR is also more or less on the monthly chart. If we have a look, it's also in the consolidation mode. It has been able to make a high of around 77 odd levels, but since then it has just hit that 77 handle and is just consolidated. So just like the Nifty and the Bank Nifty, we do have a monthly level of demand on the USD INR, and you can clearly see that the moment the price hit this 72 handle, it is more or less consolidating and moving further up. So now the way to look at the USD INR is the USD INR and the Nifty have what we call as an inverse correlation. And as a trader, it is important to keep an eye on the USD INR because in the coming few days or in the coming few weeks, if the prices hit crucial levels on the USD INR, then it is also going to make way to time the entries on the Nifty and Bank Nifty respectively because of the inverse correlation. So right now, the 72.20 odd level seems to be a good level on the USD INR where the prices are holding. And if the prices do revisit this level in the coming days or in the coming weeks to say so, then more or less we are expecting to see the Nifty to move up and move towards the all-time highs, right? So it's going to be a good idea to keep a check on the Nifty and the Bank Nifty when prices actually hit 72.20 so that using the inverse correlation, we can time our entries and our exits. So this is the level on the USD INR that I'm going to closely watch out for. And in the near term, we do have these levels of demand and supply. So these levels of demand and supply can also play out. And again, because the prices are far away from the demand zone and supply zones on the USD INR, as an options trader, you can take advantage of non-directional trading and also deploy some strategies using options in a market that is non-directional, where demand and supply zones are far away from the current market price. The sector for this week that we are looking at on the charts is the IT sector, and the IT sector has, reasonably done well. If you look at the monthly chart, it has printed an all-time high, and right now it is more or less consolidating or slightly in a little bit of a corrective phase, where you see a monthly demand zone, which is plotted by a TZI tool, which is trade zone identification, is located at 27,524, but this is obviously with a longer term perspective. So 27,524 to 25,293 is the level of demand to watch out for on the IT sector. Let's move on to the weekly chart. On the weekly chart, we do have a demand zone slightly before 27,524 as well. And that level of demand is currently right now in play, where the price have already tested this level once. We do expect to see another test coming in, and it will be interesting to see how further this level is able to hold the prices before either moving up or then probably coming down towards the lower levels of demand. But right now, this weekly level of demand is holding. So our view remains a little bit more towards the long side on the IT sector and the IT related stocks. If you look at the daily chart of the IT sector, the prices did come very, very close to that daily level of demand and have given a bounce. So again, like I said, that because this level of demand is coinciding with the weekly level of demand, it is very, very crucial for the price to either remain in this area, or we might expect to see a bounce coming out of this area. So again, depending on where the price is right now, we do expect to see all the IT related stocks more or less in the consolidation to the bullish mode right now. Okay, so let's look at Infosys now, and let us see if Infosys is also very, very close to a level of demand on the higher time frame. So this is our stock for the week, and let's have a quick look at Infosys. So if we look at Infosys and if we compare that with the IT sector, the level of demand is more or less coinciding with the weekly level of demand, right? So if you look at the weekly level of demand where the IT sector is already showing us a bounce, that is the reason why Infosys is not going down further, right? So it will be interesting to see that if the IT sector remains in that weekly level of demand, does Infosys come and test this 1623 odd level from which point it's likely to give another bounce. So keep a close watch on this weekly level of demand, 1623.40 to 1585. And on the daily chart, there is a very, very subtle level, which is more or less this gap level over here, which you also need to keep a look at. That is this. So let's plot this level. We can do that manually as well. So this level around 1616 to 1598 is a level to watch out for. And what a trader can do over here is, if he's following demand and supply, he can time this entry along with the IT sector coming at similar levels. So we just showed you the weekly level of demand on the IT sector. So if this level of demand gets triggered, then we want the IT sector also to be in that level of demand. So when both of them come together, that makes your trade a higher probability trade. All right, so thanks a lot, everyone. This was the weekly analysis. More such analysis will follow in the coming week as well. Wish you all the very best. Trade safe, and may your trades always be in the green. Take care, everyone. Have a good day. Bye bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.